G'day guys, welcome to the Mackay Goodwin Academy, which is the Mackay Goodwin podcast. Josh is trying to hold his laughter. Look guys, if you're an accountant, you're a lawyer or any other professional service provider eager for CPD points, feel free to look in the description to secure your CPD certificate and some summarised show notes. Today we're very lucky and blessed to have Mr. Stephen Michaels from Catalyst Advisors. Welcome, Stephen.
Thanks, Marcus.
And we have Joshua Pereira here as well, who's one of my associates and good friends, and he's obviously someone that's passionate about restructuring and a topic we're going to be discussing today.
Yeah.
First and foremost, introduction, Mr. Michaels, MPA Australian Broker of the Year 2024, which basically means you've written more loans than any other broker in Australia. Total, is that right?
Yeah, by volume.
By volume.
The most loans settled.
Yeah, so
thanks, mate.
We have, I guess, broking royalty here. And,
yeah, definitely.
You know, I have to pinch myself that here we are with you. Are you real? I'll get signatures afterwards, mate, and autographs. But, yeah, mate, thank you for coming along and wanting to discuss a very important topic that comes up a lot, which is
absolutely
SBRs, tax debts, and credit ratings.
I appreciate you guys having me.
Rightio.
Thank you.
You know, a lot of the small businesses that I guess this is kind of more aimed at the moment, who, you know, some of their accountants, they're engaged once a year or twice a year. They're more of a reactive resource rather than a proactive resource. So when I'm seeing out there, a lot of people come up to us and saying, "Rightio, I've got a DPN," and rather than going to their accountant, even though their accountant may receive it or deal with it, their first instances, once it arrives in their mail, is like, right, this tax debt I've got, it's all in, like, I know it's there, and I've now got this letter that says penalty, and it's in red, and holy moly, I don't know what to do with it, right? And so what I'm seeing is more often than not, or quite commonly, the first person they're going to is their broker, their mortgage broker, right? Because they're like, rightio, okay, I've got my house, or if I've got my house here, right, how much can I pull down? What can I pull out against my house to try and pay out this debt? Okay, and so they're going to their home loan, their mortgage broker, someone in the suburbs, what have you, and with the idea of, right, I'm just going to redraw against my house. But the problem is, and what they're finding is that the company and the tax debt has actually been reported to the credit agencies by the tax office. Okay, and so they're going to their home loan provider and they're like, look, we can't get you money. We can't get you finance because of these defaults against you personally or from the company. And so they're like, well, what options do you have? And some people have heard of SBR, SDR, whatever. People aren't sophisticated in that sense. And a lot of the general feedback from these particularly home loan lenders or brokers is that you cannot go insolvent, you can't make an appointment, or you can't do an SBR, because it's going to ruin your credit rating. And
I think just to add on to that as well, one of the main questions that I get, Stephen, when people are wondering about doing an SBR or inquiring about an SBR, I'd say probably the number one question is, how does it affect my credit file? Will I be able to get a loan after this? I'm thinking about buying a property or redrawing on my loan, refinancing. Will I be able to get a loan?
Yeah, exactly right, 100%. I guess the question, the first thing off the top of our head with that in mind is, what are you seeing out there when people are coming to you with money? What is the situation? And really, what is the truth in your opinion regarding credit files and ability to take finance if and when an appointment is made? Yeah,
and look, I think for better or for worse, the broker is becoming more the person to go to for financial advice. And we don't give financial advice. Our job is to understand what a client's looking to do, understand what pieces of the puzzle we can kind of play with to get the right outcome. But we see either accountants coming to us and saying, you know, Stephen, I've got a tax debt for this particular client in a company that they would benefit from a cash flow perspective, being able to roll it up in the house or roll it up into a business loan or restructure it so that the business can trade more profitably or trade out of a sticky period. So we're seeing it more and more. And the comments that I would give is, if there is a systemic issue with a business or an individual and they've racked up ATO debt and that particular business is not a going concern, or it shouldn't be a going concern because fundamentally that business shouldn't be trading.
No, that's right.
We can't help that business.
Yes.
However, the majority, 60 or 70%, something one-off has happened. Either they've got the wrong advice and they've used money from the company that they shouldn't have,
Yes.
or a director of the business has gotten ill and
Yes.
you're covering for someone, or
Yeah.
you've lost a head contract. So long and short, if we can explain to a bank that there are the reasons why this particular DPN has been issued, or there's a reason why this particular tax debt is overdue, and we've got a story to tell for a credible client,
Yes.
there are options. So that's my first comment.
Absolutely.
So we work
and
with...
that's an option outside of an insolvency appointment, so to speak. So you're like, okay, they've got this DPN. You know what? We might be able to get you some finance or draw against your house.
Absolutely.
Because you've got a credible reason as to why you're in this position.
100%. So if we're working alongside clients who that need help, and they have a good underlying business where we want to work alongside them and help them through whatever they're going through, that's the first tick box. That's usually the majority.
I agree, mate. I don't know about you, Josh. I mean, look, at the end of the day, if we can save people coming to us and they don't need to restructure, we're for it, right?
Well, I think we're the last people that the clients want to see, and we believe that as well. Like Marcus said, if there's any alternative than doing a restructure or some sort of formal appointment, we're all for it.
Yeah, absolutely. And I think you've hit the nail on the head there, mate, because and what it was that I think you said you've got a legitimate reason, and you can see a path forward where if you actually drew down on a loan or you got them some cash, you could get it from the bank and you go back in, they'd recover and they'd continue trading profitably going forward.
Absolutely.
And where there is concern is, okay, let's just draw down against the house, right? But you actually haven't stopped that systemic problem or the hemorrhage of cash.
Correct.
And you as a broker have the common decency to say, guys, you know what, I might be able to get you some money, but you're just putting it into your business, and you're going to be in this same... You're kicking the can down the road, and you get in the same position again.
Correct. And the broker doesn't really want to be alongside a customer who's doesn't have the foresight to understand the problem or wants to be helped.
Yeah.
And the bank can't help someone that can't be helped. So that's the first tick box. But the good news story is, 8 or 9 out of 10 customers who come with an overdue tax debt, or they might be in VA or liquidation, and they're usually good businesses where something one-off has gone wrong.
Yeah, right.
And then, okay, now let's go to the next step. And I'll answer your pointy question. If a client is going through a small business restructure, which means that your business would be helping them to negotiate with the main creditor, which is usually ATO, to work out how can we compromise this debt. We owe the ATO 500 grand. Look, we could probably pay you back 300 grand. Can we please meet in the middle, and so that our business can trade out of it?
Yeah.
We have helped numerous customers to obtain finance to help with the financing of that $300,000 burden.
Yes. Okay. Right.
And so the taboo around that is...
And so sorry, to cut you off. Is that after? Is that before? Is that before a proposal or an appointment?
Yep.
Is that something that comes afterwards, or can you play both roles in that sense?
Yeah, really good question, because the answer is it can be before or after. And the scenario that I might give is, if we work alongside a Mackay Goodwin and the client and understand what the game plan will be going into a small business restructure, because it's my understanding that when you're engaging the major creditor, the ATO, you need to come in with, here's our plan to see you back your debt or your credit, right?
Yes.
You can't go in there unprepared. That just sets this SBR up for failure.
100%.
So if you're coming in with a game plan, and this is pre-SBR, we can work alongside the client to work out what financing can we get you, assuming that the SBR gets up and the ATO is happy with the plan.
Yes.
So that's kind of the first and foremost, where we can solve this even before you go through a small business restructure. The example might be, before you enter into that SBR, we've already gotten you the 100 grand you need, or the $200,000 you need as a line of credit.
So you're going in with confidence.
Correct. Or you've already gone in with the answer that you're going to need after the SBR gets up.
And Stephen, I guess 2 questions. Is that like you get the pre-approval beforehand and it's all ready to go, so once the ATO accepts that SBR or the creditors, the money's in the bank account straight away?
Yeah, it could be that, but it could be, not to kind of be so optimistic, but it could be better than that. There are instances where we've been able to access the money and have it in a bank account ready to go, and then you're going in. So it's not a pre-approval, you have full finance approval, and you've got money at bank. So that I'd probably put to 15% of scenarios where you can have the money up front before you engage.
That would sit in like an offset account or something like that.
Correct.
Where, you know what, if it actually, in the unlikely event or in the event, who knows? that the proposal's not accepted by, as you said, the largest creditor, who's 90% of the time the tax man,
Yes.
right?
Yeah.
Then they're not incurring any further interest. You could even repay that back later on if need be.
Absolutely.
But at least you that comfort
Absolutely.
that entering into this, you're confident and vindictive in your...
100%.
Second question. These aren't your loan sharks down the road or things like that. These are proper lenders.
Yeah, absolutely. So in that scenario, and I'll call out, that's kind of for your 10 or 15% of cases, that could be funded by a Big Four bank or a second-tier bank like a Macquarie or an ING.
Not possible, mate.
Absolutely.
This is what I hear all the time. That just can't happen.
And that's where we start with our customers, right? Why would we take them to the bottom of the rung unless we've worked through whether or not they can get to a Big Four or a top-tier bank to begin with? So in 1 out of 10, 2 out of 10 scenarios, we can thread the needle for good businesses that have a story to tell with good fundamentals, where you can provision that money up front. That other scenario where you mentioned getting a pre-approved limit and then you go through the SBR, banks, no loan sharks, Pepper Money, MA Money, Latrobe Financial, Liberty, Bluestone, Resimac. It's that non-conforming lending space where they're all regulated by the same bodies, right? They're on the ASX, most of them. They've got internet banking platforms. You've got regional facilities. They're a bank, right? They're not a household name bank, but they're large, reputable institutions, can provide approvals knowing full well that this money will be used to pay out tax debt. No issues whatsoever.
Absolutely.
And that would probably cater for 50%, 60%.
Right.
So 1 to 2 out of 10, you'd probably thread the needle through a Big Four bank. The other 5 or 6 that come through the door to our business might go to a Pepper or a Latrobe.
Look, on that point, mate, like everyone's like, oh, private lender. There's a difference between a private lender and there's a difference between a non-bank lender, right?
Yes.
And just because people think, oh, well, it's not CBA, it's not NAB, it's not ANZ, then these guys must be private. No, they're proper banks.
Absolutely.
And their rates are sometimes just as competitive as the bigger banks.
For sure.
And the added bonus is that they're more flexible. They understand. They want to work with real Australians who are out there struggling, who have had a bit of luck go against them.
Absolutely.
To get back on their feet and stand by them.
Yeah.
And so, I mean, is this a situation like in a home loans position that it's a 30-year term, right? Like they're proper. It's a proper term.
Absolutely. But segueing off that, our strategy, again, for good operating businesses that kind of need that fix to get them back on their feet, back on trading on kind of regular terms and keep their debts under control, if we help them to get lending through a non-bank lender, we're not leaving them there and never speaking to them again.
No.
Usually it's a strategy that's, 3 years might sound like a long time, but it's not. The first year we've set up the loan, we've consolidated that debt, and we've got you out of a pickle. Or we've worked alongside to get you out of a pickle. A year goes by, if you're making your repayments...
Peter. Good old Pete. How are you, bud?
You're a legend. If 12 months from now, that particular business and customer is making their repayments on time, there's no reason why we can't take them back to a normal bank. So as much as the loan is absolutely for 30 years, these loans aren't lock-in and how dare you leave us, we're going to slap you with nasty exit fees. The normal case study is we take you to a non-bank lender, we show that bank and another bank that you are credit worthy and you can keep up with your repayments, and then we're moving you back to a traditional bank.
And so, mate, what I'm hearing here is, and correct me if I'm wrong, Joshy, from your perspective, but I think there's a lot more required now of a broker, right? You're not just someone that's going to get them a home loan and then tick them off and see you later. You're playing a much more, particularly the options available. No longer is it just the Big Four.
No.
You have so many other options, and it's up to the lender to provide additional services or go out of their way. It's not like, here's your loan, see you later, come back to when you need a new one. It's, you're proactive in the process. You're working for the client, and you've got options.
I say this I've been saying this for 5 years, so this isn't just a recent comment. Banks don't compete on interest rate; they compete on credit policy and guidelines.
Right.
And that's the crux of it, which is interest rate fees is absolutely important, but it shouldn't be at the forefront. It should be which bank will understand my scenario, which bank will hear my story, and which bank will give me the solution that I want, and then of those banks, who will give me the best rate. That's the decision point, because, not to sound blunt,
no, mate,
but
we're very candid here, mate.
Either you take the option you've got, or you keep begging to a Big Four bank to help you, and they don't help you, And then what happens? You tell me. What happens when someone is stubborn or loyal to an institution that we write?
They struggle. Well, they're the ones losing.
Correct.
And they're the ones that come to us saying, I can't pay wages tomorrow. Help me.
Yeah.
No, absolutely. And look, my business is lucky enough to deal with 40 different banks every month. That's the type of volume that we're writing. So we do a lot of loans through the big four banks. Absolutely.
Because you're
the big no. To be the number one broker for 2024, I wrote individually $385 million of loans, which is great. My business wrote $800 million in that year.
Is that resi?
It's a mix between residential and commercial lending.
Right, yeah, okay.
Yeah. And we're probably 70% residential lending, which is your home loans, investment loans, and then 30% commercial lending, which are your business loans, commercial lending, business and equipment finance.
Yeah.
So that 30% still represents 240 million out of that 800 million that my whole business wrote.
Yeah.
And the reason I bring those numbers up is if you're a broker that only has 5 customers a month and you're settling $20 million a year, which are great numbers, that's each to their own. You can only use a certain amount of banks on a regular basis.
Yes.
We have to be in the know with what the whole spectrum of the lending market is doing at one point in time.
Yeah.
Otherwise, we just can't keep up with what our customers' needs are.
Yeah, so what you're saying is, mate, even for mate, I've got a lot of brokers that follow me, and I do a lot with brokers, and I know you do too.
Yeah.
And the thing is that, don't turn someone away just because you're limited to your resources.
Absolutely.
Make inquiries, look into options.
For sure.
Speak to someone, reach out. Don't just turn someone away, because they're coming to me and they're like, mate, I don't know what to do, blah, blah. I've been to 4 brokers and none of them said I can get finance because of this. And I'm like, look, I'm not even a broker myself.
Yeah.
Okay, I do a bit of time to time. I connect people, private lending, what have you. But I'm like, I know for a fact that there are a plethora of people out there who would be more than willing to help you and provide a result.
And if I've learned anything over the last 13 years of doing this, it's if there's a story to be told and you believe in that customer, there is a bank out there. And that plays into exactly what you've said. And for the brokers listening, the customers that we've turned around, and it was, I sat down with Josh. I understand that he might not fit into the traditional box, but from what he's told me and what I can see in terms of his financials, tax returns, and the story, there's a bankable client here.
Yeah.
If you were to go out and to your point, go and try and search for that 11th or 12th lender and do a bit of a ring around, lo and behold, you've got the fantastic outcome for the customer.
Yeah.
You've learned something new, and now you've just opened up yourself to be an even more valuable resource for that particular network. So, Catalyst,
But it's not just that, right? It's on top of that. And I think maybe you were telling me the story about the broker who was the hero, right? In the sense that everyone had turned him away. And I'll let you tell the story. Everyone had turned this particular person away. And then the broker's like, you know what? I can help you restructure your debt. I can help you get on top of your company's tax debt, stop the hemorrhage.
Yep.
I can get someone who can actually provide you with finance, and then become their trusted advisor.
And you actually assisted in that one, yourself and Jonathan.
Yeah.
So it was a scenario where the 2 directors, they had a cafe up in Queensland.
Yep.
They had a DPN. They went through an SBR with us. We compromised the tax debt down to about 20 cents on the dollar.
Yep.
And their whole plan was they had equity in their house. They had a property. They had equity. They wanted just to pay it out in one lump sum, and they wanted to use the equity. And they'd gone to plenty of people, different brokers, different lenders, and they called me and said, Josh, we're struggling. I don't know if we'll be able to do this.
Yeah.
All the banks are saying no. All the lenders are saying no. All the brokers are saying no.
Yeah.
Can't be done. Can't be done. Stephen and Jonathan came to the rescue.
Yeah.
They were able to pull out the equity, pay out the tax debt.
Yep.
Tax debt's compromised, and it's all happy days. And you're right, Marcus. You guys are the heroes.
Yeah. Well,
and then from there, you open yourself up to their network.
A customer for life.
And they're a customer for life. Exactly.
Well, mate, now these people, I've seen with other brokers too, who've come to, so they're like, just exactly the same as Josh's point. It's like, I've had someone, right, that has, for example, a director said to me, he said, look, I've been tossing and turning for a year and a half now about this tax out. I don't know how to do it. I can't sleep at night, blah, blah, blah. I've got no solutions. I've spoken to a broker who has then referred me to you, and you've restructured my debt.
Yep.
And, we've been able to, in a situation where creditors get the maximum amount they can, given the circumstances, right?
Yep.
Same situation. had a situation where I believe, from memory, I think a debtor fell over, couldn't pay, and then he was struggling ever since then. They had like 2 or 3 main clients.
Yep.
They fell over, they couldn't deal with it. Just tossing and turning at night, can't sleep at night. Approaches their broker sends it to me. We're in a position where we're able to restructure that debt down to, I think, maybe 25 or 30 cents on the dollar. Don't quote me on that.
Yep.
And then what happened was then not only was the company up and running, but then they were able to then refinance later on into a better rate, better loan, and pay and not having to fork out money that they can no longer afford.
Yep.
And like that hemorrhage or bottomless pit is now gone.
Yep.
But then guess who's the hero of the day? Is the broker.
Yeah,
it's because of you, mate. I've got my life back. I can sleep now.
Yep.
My business is running. I've got as much back to credit as I can given the circumstances, which a lot of people, mate, that they are worried about. They want to give back.
Absolutely.
It's not like people want to hide and run. They want to give as much back in their circumstances.
Yep.
So they feel comfortable. They've done the best thing that they can, and they owe it now to that broker. And the broker now becomes their trusted advisor.
Yeah.
Mate, they're not going to go to the bathroom without asking for the broker's.
Yeah, no.
They can though.
Oh,
Yeah.
well, depends who you go to. Yeah.
No, absolutely. And look, that's obviously why I keep doing what I'm doing, and I dare say it's probably why you gentlemen do what you do as well.
People,
it's for people that I was going to say deserve a second chance. It's not even that. It's I'm in a pickle. I don't want to bury my head. I want the right advice, and like, help me through this. They're probably amazing at what they do in their profession. But they just need that kind of guidance and, to really understand all of the options on the table. Because let's call a spade and let's jump into some numbers, if I might.
Please,
if you're going to a bank at the moment for a home loan, you're at 5.75%, right, after the most recent cut. If you're going to a non-bank lender, you're probably at 6.75%. There's about 100 basis points difference.
Okay.
If you have a tax debt that's going to be consolidated, probably notch up another 0.5%. So you're at 7.25%. As an interest rate, if a bank is going to come in and say, I will help you to consolidate tax debt and I'll give you a 30-year loan term. So there is a premium to taking out these options. However, what we always spell out, and it's not for us to tell a client what to do, it's to give them the options. As I said, give them the advice.
And that's the same as us, mate.
But you've got a $200,000 tax debt, and the ATO, how long do they want it back in? 24 months? Maybe 12 months? Let's say 24 months. They want 15 grand a month, give or take, paid back to pay that debt back. If we were to consolidate $200,000 on a 7.5% interest rate, the repayment is probably $4,000 a month.
Yeah, right.
Right? And I appreciate that's over a 30-year loan term, and we don't want someone to drag tax debt out for that long, but what would the business owner do? Exactly right. That $11,000 they're not forced to pay would go back into the business's cash flow.
100%.
Hopefully they're reinvesting that to turn their business or continue to turn their business around. And then we'd be looking to either pay that off as quickly as we want with no penalties, or roll that to a 6% or a 5.75% in 12 months' time. So if you're helping these clients and you're going along the journey with them, another point probably too, Marcus and Josh, is if you're a good broker, and there are a lot of awesome brokers out there that are probably doing exactly what I'm saying, set them up with a loan and then check in with them and make sure that they're being looked after long term. Then you've got, like, this isn't a secret, you get paid when you introduce them to the first bank, and you probably get paid again when you introduce them to the second top tier bank as well. It's in our interest to
help them
to stay with the customer through that journey and execute the strategy, that 2 or 3 year strategy. You've already got them out of a pickle, Pete's pickle.
Hi, Pete.
When you've kind of helped them to consolidate that tax debt, they're talking about all their friends on how fantastic this was, and someone else, and you've got a customer for life.
Absolutely.
And so it's a no-brainer. If you believe in the story and you can have that conversation, explain it to the bank, and get them out of that.
And I think that's a big thing for yourself, the bank, the creditors, everyone. It's about just believing that story, and I'd say the vast majority, like you said earlier, Stephen, they've fallen on hard times, whether it's COVID or, like you said, someone getting ill, or just things, people not paying, debtors going into liquidation or whatnot. It's not like they're deliberately not trying to pay the tax debt.
No,
it's genuine people who've just fallen on hard times.
Correct.
And just need a second chance.
And a lot of these payment arrangements that they're entering into, which you sort of mentioned and touched on as well, Joshy, but let's just say it's 15 grand a month. Something that they should probably never have entered into in any event with the taxman. And whether it's their advisor or someone else that's done that. But what I'm also seeing too, when they've got these large returns that they're struggling to make, what's actually happening is the tax bill's going down, but then their other creditors are then struggling.
Yeah.
Right? So the trade credits start to rise. And so it's just like, well, you know, there's also an incentive there to avoid, you know, insolvent trading, so to speak, or other creditors being burned at the expense of the taxman and whatnot. So, you know, there is options. And as you say, it might cost a little bit more. But guess what? They're not paying 13 or 12% in tax plus penalties, right? Oh, we don't want to go non-bank lender because they're too expensive. They've got to work with us. Mate, you're paying 13% tax at the tax office.
Yep. Yeah, and it's an unfortunate situation. Let's all call it that. But it's the situation that particular person or company's in. So we've got to deal with it, right?
Yeah, mate, absolutely.
And if we don't deal with it, it doesn't go away.
I'm going to put a very blunt question to you. Goes into SBR. Will it affect is my credit rating ruined for life? Will I never get a loan again?
The short answer is absolutely no. And again, I'll play it out with a scenario, a live scenario. But we had a customer who, before going into the SBR, we understood kind of what their capacity was to borrow, what equity they had in their home. And we understood, all right, you know, after this SBR gets up, hopefully, we'll be able to get them, I think it was like 150 grand to help with that debt that we know is going to be at the end of the tunnel. The day that the SBR was entered into, the negotiation period, I think goes for 30 days.
Yeah, thereabouts.
Yep.
Yeah.
The credit file for that customer will list some sort of voluntary administration or liquidation. So
the current status.
Absolutely. Current status, before the SBR was entered into, credit score 800. As soon as the SBR was entered into, credit score 300. So there's obviously a large dip.
Yep.
And you can't miss it.
Yep.
Right? But the day after the SBR is completed, and for this particular customer, it was, okay, ATO said, we approve, we agree, we'll give you 30 cents, or you give us 30 cents in a dollar, we're good to go.
Yep.
The day after that 30-day period was up, the credit score went back to 800.
Wow.
The day after. So the clear messaging that I'd give is, if you're going through an SBR during the time that the small business restructure is going on, absolutely. Right?
Yeah.
After it doesn't linger.
Yes.
Because, and just stating the obvious, if the ATO as the main creditor is happy with the plan and they're going to approve it, they know that your business deserves to continue to trade.
Absolutely.
And therefore you're not in liquidation or you're not in voluntary administration. If the SBR is not approved, right, and you need to foot the full bill, two things will happen. Either A, you can't foot the full bill and you will wind up, and unfortunately your credit score is going to be blemished for a while. But if you can foot the bill miraculously, again, you're back on track.
So what you're saying, in fact, is that the SBR is like a vetting process for the banks, in the sense that they've put their case forward and the creditors believe it, the taxman believes in it, and they've accepted it.
Absolutely.
And so therefore we should back them too.
That is 100%. If Josh mentioned it before about, can you get a pre-approval for a customer? We've had instances where before the SBR is entered into, that 30-day period, we approach the bank and say, we are letting you know now that our client is going to go through a small business restructure and their credit score will be compromised for the next 30 days. Okay. We're letting you know.
Yes.
And here's what we're doing, and here's what we want to provision for. And to your earlier kind of question, or can this happen, really Joshy?
Yeah.
The bank says, not a problem. We will approve the finance for this, subject to an outcome from the SBR, and subject to us running an updated credit check to confirm that things are back on track.
So the banks understand what an SBR is, and they're willing to help.
Look, the reality is, and I'm lucky enough where we can speak to a lot of the decision makers within the banks, the state managers, the heads of risk. Like we've sat down with the head of risk and credit at a lot of these non-bank lenders, because they're usually where these these deals land, to explain the real world scenario, and they get it. And we give them the heads up, and it's all about running a transparent process. And their credit managers, the analysts that are approving and declining the loan, they get it. The industry of banking, every industry, right? It takes years to kind of catch up to what's actually happening on the ground.
Yes.
But banks are becoming much more accustomed to what's happening in the real world, to the point where, and this would have been maybe 2 months ago, the interest that you were claiming on your ATO debts is no longer tax deductible. So now accountants, rightfully, are saying, well, we don't want to take out these payment plans because the interest can no longer come off the bottom line. So if you can finance your way out of it, it's going to be a better outcome for the customer, for the company.
Good point.
So banks understand that, and they're positioning themselves to capture those customers and help those customers. So the answer is, banks absolutely understand what's going on. Fair enough, you might need to explain it once, twice, thrice, But that's what we're here to do. If it was easy, a customer could go in and explain it. But they're becoming much more switched on to, hang on, there's a cohort out there of business owners that have debt that they need to kind of go into a restructure for, and we can help them trade out of it.
Yeah.
And so they're becoming much more exposed to it. Their credit policies and guidelines are adapting towards it for the right customers. Absolutely.
That's really interesting, mate, and particularly as well when you touched on the interest, right? No longer deductible from the taxman. So you know, you're going to be getting a better interest rate through a non-bank lender or someone along those lines, but also too that interest that you're going to be paying, if it is through the business or whatnot, it's deductible
for sure. Yep, absolutely. So we've had like an increasing inquiry post that announcement from the ATO, from a lot of our accountants, a lot of the kind of liquidators that we work alongside, to say it's no longer as viable to run a payment plan.
Yeah.
Even though it's usually not ideal anyway.
No.
But businesses that have strong cash flow that can sustain it, absolutely.
Yeah.
Now it's not, let's take a payment plan out and then we'll solve. It's more so before we take a payment plan out, can we solve for this by a bank that understands?
Yeah, 100%. Well, and on that too, right? I might be going on a bit of a tangent here, and I'm cold. I'm just trying to keep my standard thing, right?
Give him a hug.
Black shirt.
Give him a hug,
my black
Josh.
shirt, my ice long black. I'm struggling through this.
Give him a hug.
About 0 degrees here.
Yep.
Giddy up. But anyway, people, what I find when I speak to brokers, and I've done a couple of presentations at some broking networks and functions. Brokers always, like traditionally, they always come to me and go, "Oh, thank you, young Thomas."
The service.
Look at me now, mate. The preppy, what are those boys?
Yeah, you're preppy.
The old Serb. Anyway, they always want to know, what do you think's going to happen with the economy? What's this? And I'm like, well, we're not economists. We can only see the levels of distress, and so, you know, what do you think's going to happen? You know, is the house prices going to go up? We're going to do this. I said, well, I'm not an economist.
Yep.
You know, my background's in insolvency. I like to restructure. But I'll go, if there is some advice that I can give a broker, would be this, is that, mate, pivot. Don't always look for those clean deals. What is going to make the difference between a good broker and a top-tier broker
for sure
in the next 5 to 10 years in particular is how they deal with circumstances revolving around debt, and in particular tax debt. $105 billion of tax debt owned.
Roundabout
thereabouts.
Wow.
And that's what they know about.
Wow.
That's probably not that, and some of it's probably estimates, right? So debt is going to come up more and more and more, and the sooner that you're able to pivot and deal and accommodate and try and come up with a out-of-the-box solution for your client, Mr. Broker, will get you one step in front and make you more relevant.
Well,
it's as simple as that.
AI, buzzword, technologies, advancements, everyone's kind of getting on that technology train, or they always are.
Yeah.
Banks are doing it, brokerages are doing it. The easy, clear-cut deals are going to be swallowed up by technology. They're the first to
That's
go.
Exactly right.
So what is a broker really doing? You can go on Finder or compare the market now. They do home loans, and you can compare interest rates. So if you're a brokerage out there that's just selling on rate and fee, you're probably going to get left behind by AI.
So your vanilla deals, not only now do you have your general competitors out there, right? And competition's great. Right. The other home loan brokers are just want all these vanilla deals, but you're now competing with a much more efficient,
absolutely,
and easily accessible thing in AI.
For sure. And not that you're or me or our business is ever,
as well, mate.
We're never immune to it, but if I was to kind of start building a moat, and luckily we already have, around where broking will be in 5 years' time, your complex transactions that involve a human touch, a story, some thought, calling through relationships and learning from past experience would be these types of deals. And again, you go through the mud with a client and go to war with them and come out the other end. They're not going to go to the AI technology. They're going to speak to you anyway.
It requires it needs to be massaged.
Definitely. And like you said, it needs that human touch and a bit of empathy as well to understand what's going on.
And communication. You've got to be able to appropriately tell that story. You can't just, it's very hard to tell it by ticking a box.
No. And
it actually needs to take time. And perhaps, you know what? It could be another little incentive here. I know mortgage brokers like to make money. maybe you can make a little bit more money. But you know what? You're providing, not only are you earning that money, but you're providing a better solution for that client.
Yeah, for sure. Yeah.
And it's about everyone winning, mate. Like, you know, it's not about, you know, I hate it when people are in trouble. I always try and help people when I can. And that is not just the directors. Don't get me wrong. Like, you know, the practitioners with us, you know, they've got the obligation to the creditors.
Yep.
I feel for the creditors too.
Yeah.
The creditors are the ones that are really the ones here getting burnt. And if we have, I think as not only as like with directors of companies, you have the obligation to think in their best interests, as do the other creditors, as does the taxman.
Yep.
Right? You know, taking on a payment arrangement that, you know, is borderline, they can't actually fulfill.
Yep.
You know, they've got to think about the other people that could be missing out because these guys are getting paid in priority.
Yeah, and those people probably can't sustain the hit as well as the taxman. It's your mum and pop businesses, your small tradies.
We see the domino, right?
Yeah, of course. And you're seeing at the moment, one domino falls, and then a couple months later, they all go. The rest goes, and it's really sad.
Yeah,
for sure.
So I guess if anything, keep the mind open. Keep your options open.
For sure.
And I think what we can sort of take out, which is something I really wanted to get across, was interact with, approach your broker.
Yep.
Have your broker give them as much information as you can.
Yep.
To help them understand your story.
Yep.
Have either yourself or the broker be upfront and honest and interact with whoever the non-bank lender is, and tell them what your plans are. Don't hide. So many people try and hide things. Oh, we can't tell them. I don't want them to know. You need to tell them. It's the same as a taxman. They need to know so they can work with you.
Super important.
If you don't tell the tax office what's going on, or you don't lodge, you don't do this, mate, they're going to, obviously, of course, they're going to think worst case scenario.
Yeah, brokers are in a really privileged position where we kind of know the game that we're about to enter when we approach a bank, right?
Yeah.
And you can use that for good or you can use that for bad. And what I mean by that is, if you decide to withhold or not play a straight bat, as I like to say it, not be fully transparent from day dot, what you'll find is, and the banks in terms of how they approach lending, like the technology they have, the expertise within those banks, they'll find out what you're looking to hide. And not only will you tarnish your customer's reputation, because it's their application,
of course,
you'll tarnish your reputation as a broker, right?
Yes.
The way that I always approach these scenarios is, come to the table with the biggest hurdle. And if you approach in that manner and the bank says no straight away, well, all of the other easily met criteria, who cares? Because you've already stopped the deal. You can give your client reasons as to why. This is the reason why. If we can't get over this, we're wasting everyone's time. If the bank can swallow the pill on number one, the conversation just gets easier. Your decision time to yes is quicker. And the relationship that you're building with that bank is infinite.
100%.
That's how you approach it. It's you play all your cards. Don't play all of your cards in one go. The bank will have a connuption, and they'll think, what am I? I don't know what am I trying to solve for here? Go to them with the biggest problem out in the air with the mitigants as to why,
and a potential solution.
Exactly right. As to why you expect that we should overcome this, and why you think the bank that they're a credit-worthy customer. And if you have an arm wrestle on that point, and you win that arm wrestle. And to your point before, the bank's going to win because they're going to get a customer. The customer's going to win because they're now in a better position. The creditor's going to win because they're paid back their debt. And hopefully there's a good news story for everyone.
Exactly right. And 100, absolutely, mate. And just, I don't know about you, Joshy, but sometimes I've had brokers go, well, what, like just in passing, why would I put them through to you? Because then I can't lend as much, so I'm not going to get as much as commission. I'm like, mate, that is blinkers. You should be acting in the best interest of your client first and foremost, and I'm a firm believer in that. And karma. You act in their best interest. You know what? It will come back to you one way or another, right? And you want to be able to put your head down or not. But sometimes too, let's say it's an SBR scenario. Let's go, mate. Yeah, you might be paying less or something along those lines, but they might need an upfront for superannuation, right? So you get some money to pay for that. And then you can and then the loan, the amount, whatever it is, will be cents in the dollar of whatever their debt is, generally speaking. Right. So there's that, and then they're out on the other side, and then once they get going, well, there's another refi potential option.
Absolutely.
So don't shy away because you're going to be reducing the amount of your of your comms. Think about it. There are other options there, and you could actually win out of it. And not just that, you can feel good and go to bed at night knowing you've done the right thing.
For sure.
But also too, you gain that trusted advisor and you'll get 3 or 4 organic referrals off the
For
back
sure.
of that.
And it's funny. Something light bulb just clicked.
Yeah, that's what
and
happens when we do these.
That's it. The light bulb clicks. What I would be thinking would be happening on the outside world, and what I mean by is other brokers.
Yeah.
Probably not the majority of the industry. No, not at all. I love my cohort of brokers. I think it's an awesome industry to be in.
I mean, you play a very important
Yeah,
role.
and there are some awesome fair income men and women out there that are giving great advice and are 100% by their client.
Yeah.
But what you might be experiencing out in podcast land, you're listening, as opposed to the broker thinking, I'll try and thread the needle with a big 4 bank, doesn't work, that's fine.
No.
I'll then try and approach a non-bank lender.
Yeah.
They're skipping that altogether and saying private debt. Go to a private lender and let's talk numbers there. As opposed to a 7.5% rate, it's 11% with a 3% establishment fee. So you're 14%. I need you to pay 14% to solve this problem. Now, I am not saying that might not be the right outcome, because in instances there are customers we can't help,
Of course.
for the right reasons, and we do need to go to a private lender,
Yes.
which simply means an institution or a company that can lend based on their own appetite.
Yes.
They can write their own credit policy and guidelines.
And private lender is short-term lender. Let's face it.
Correct, yeah, and it's maximum term you'll get out of a private loan is probably 24 months. Usually it's 12 months. Traditionally it's 3 months,
Yeah,
right?
yeah,
So,
yeah.
And they serve a purpose in market.
That's
Private
right.
private lending and private credit is very, very,
Absolutely.
very important. And the interest rate and the cost, I'm not saying is
But
exorbitant.
it's not your final solution.
Correct. That's my light bulb moment. What we take our clients through is the top of the pyramid, which is, can I get you 5% money? And if I can't, what can I do to get you an interim solution? And if I can't, I'll let you know your options.
Yeah.
So we don't skip to the bottom.
Do you think the brokers or the people that skip to the bottom, it's just not knowing how
Ignorance.
to approach that middle section or not having the connection?
Absolutely, absolutely. And that's a really good point to be made. It's not like I'm lazy and I just want to clip the ticket and make more money and I just want this customer off my book. Most of the time it's, I don't know where to start.
This is my only option.
I do not know where to start. And this has worked for me in the past. And as I said, maybe half the time a private credit option is their only option.
Yeah.
But if you take the time to take the customer through that journey of, this is what I've done before I've gotten here.
Yeah.
Then you're going to be so much more appreciated.
But even with other brokers, Stephen, like, I'm a firm believer, and as are you, Joshy, in the sense that, like, just ask us a question. Like, even other, like, accountants, and they're like, look, this job's going to this particular firm or practitioner, but I want to bounce some, get your thoughts.
Yeah.
Mate, I'm more than happy
Absolutely.
to provide it. There is no obligation whatsoever. At the end of the day, I want the creditors and to get a best result, and I want the client looked after and not taken advantage of.
Yeah.
And does that go with you as well, mate? If some of these brokers out here are listening and they're happy to bounce ideas off you or something along those lines, I mean, I don't want to give away all your trade secrets,
No.
mate.
There's generally no animosity in the broking industry, or from what I've seen, and there are so many
you guys
clients and
often work
opportunities.
together?
Mate, I have not competed on a deal with another broker. I don't know the last time.
Yeah, right.
And I think the last time I had a client who was looked after by a broker that I knew, we both shook hands and said, do you want to take it or not? I know you take it, I take it. Like, there's politeness and like, it's a community.
Well, we try to promote the same thing, right?
Absolutely.
Definitely. I think, like you said, at the end of the day, we just want what's best for the creditors, the director, the company.
Yep.
Just what's best for everyone.
Absolutely.
That comes first. And if we can't help, or we think there's someone else who can assist, we're the first ones to tell you that we shouldn't be like your option. Go talk to this person. Go talk to Stephen.
All the time.
And like you said, Marcus, earlier, we believe in karma. So what goes around comes around.
Yeah.
And
It's not about the short-term gain.
no,
it's
definitely
about,
not.
Yeah, and if like, you know, everyone's in the business of selling something. We're selling a service or like a restructure, or we're selling the advice to go and get debt from XYZ institution. If you're not selling your proposition with conviction and you actually trust in it, they'll see the cracks.
you got to believe in it, right?
You'll see the cracks.
Yeah.
So to your point, Josh, if you're not the best solution, but you don't tell the customer that, and you run like a really underbaked process.
Well, you reckon they can see through that?
100%. And whether they see it in the moment is one story.
Yeah.
Usually what happens is the loan's set up in the wrong way. It's a shortcut. It was a Band-Aid fix. And then a year later, if you're lucky to get a year loan from a private lender, there's no exit.
Yeah.
I've got to sell the property.
What's the exit?
Yeah. And again, there's a need for that private credit
Absolutely.
solution, and you can trade out of private credit lending.
And it's becoming, to be fair, it's becoming more and more important.
Yeah, and you know the
more
rate,
competitive
the
too.
rate is the risk. I always say that if you think of interest rate or cost, it's all about the risk profile. If a bank won't do it and a non-bank won't do it, there's a risk there that why they're not doing it.
And that'll come down to, like, let's say it's a warehouse facility. We're sort of going off market here, but based on their insurance covenants or something along those lines. Some people are, we've got to have 2 directors. We need 1 director PG in this. So there's all change. And then, therefore, that's why there might be a difference in rate. Not only do they like to charge a little bit more interest, let's say, but also to they're guided by their warehouse facility and guidelines and insurances and risk. Yep. It all comes down to risk.
Absolutely.
Mate, do you have any questions for us?
What are you seeing in the market at the moment? Have you seen a shift? And not to kind of try and give context, but back during COVID, you had all these handouts from government.
Yeah.
And you wouldn't have seen many businesses going under into liquidation because they're getting.
I think insolvency practitioners were going under during that.
Yeah. And so my very mum and dad approach to seeing that type of stimulus go out, and let's say businesses that were trading solvently that probably shouldn't be, is that, you know, that's going to wear out, and we're going to have a lot more businesses that shouldn't be trading going under. Are we seeing that yet? Is that ever going to happen?
I think so. I think post-COVID and the government handouts and sort of the tax office taking a bit of a reprieve from collecting, it's sort of shifting now. They're really going hard on collections at the moment and issuing director penalty notices and stuff like that. And they're really trying to, I guess, focus on collections. So I guess in turn we're seeing a big rise in appointments. Not so much liquidations and things like that, but really the small business restructures for those who are eligible. And it's great. It's not...
It's
you're
great that
sinking
there's
a
that
company
option in terms of an SBR, right?
Yeah. It's great that there's that option, exactly. And it's not like you're sinking the company. It's a failed entity. You're giving the companies a second chance. I think there is a space where there are those zombie companies, so to speak, where they probably shouldn't continue trading and they've just been boosted through COVID because of those handouts.
They're definitely starting to
they're starting to fall over. Just
and
because
identified.
It's sort of just too far gone to do a small business restructure.
Well, sorry, just off that, because that was my other thought. When is the right time to start speaking about whether a small business restructure should be entered into? How does that engagement take place? How early in the piece do people come to you? Are they coming to you too late? Or what's the common
Generally,
approach?
it's too
What's
late.
the recommended approach?
For me, I find that people come to us far too late. And I think, what am I seeing? I'm seeing, to be honest, it comes down to the interaction of the accountant. So how proactive the accountant is. So if we've got someone who meets with their accountant once a month or once every 2 months or something like that, they're coming to us a lot quicker, and a lot earlier, and with a lot more options. Okay. So in that instance, general rule of thumb is you lodge your BAS, you see what your liability is, see your position, look at your forecast. Right, this, okay, we're going to be okay, we're going to pay this. If you see a hiccup, if someone's fallen down, if you've got some bad debts, that you just like, you know what, I don't know if I'm going to be able to meet this one up. It's, for me, as soon as you need to go on a payment arrangement or something like that,
that's the first sign.
Or one of your main sources of income is disrupted, I would certainly reach out to your accountant just for some guidance, some strategic advice. Don't leave it too late. But those ones, I find that, you know, they're like, oh, but, you know, I've got a great accountant and he charges me $1,600 a year. And I'm like, but, buddy, like, you got a big firm. Like, you started small with this accountant and you've grown and you've sort of outgrown that accountant to the point of you're doing your taxes for a financial year that took place, you know, it finished over 12 months ago. And now, how can you then make informed business decisions based on that? And then once it all comes together, you realise that you're stuffed. And you realise that all that money you've put off against your personal house, you're not getting back because it's gone into that big hemorrhage pot of stuff. So when should someone reach out to us? Mate, as soon as you notify that there's something that might disrupt your general trading pattern or your ability to pay, at least touch base with your accountant. Get in your accountant's face more often. Do not just sit there and wait at the end of the year to do your financial statements and whatnot, lodge. I tell you what, lodge your BASs.
Yep.
Your BASs are a great source. People historically were scared to lodge BASs because they're like, we don't have the money to pay. Well, guess what? If you don't have the money to pay, mate, that's the time you need to put your bloody hand up.
That's the first flag.
And work with the taxman.
Wow.
If the taxman doesn't know what your situation is, he's not going to be able to work with you.
But what, like, you know, I've spoken about hopefully the approach from brokers and, you know, maybe some insights in what we do and what other brokers can do. What should accountants be doing? Do accountants, are they proactive when, because I can see a customer coming to an accountant and saying, I'm behind on my BAS number one, I'm behind on my BAS number two, what are we doing here? Accountants open to, because they're the conduit between the end customer and your business, right?
Absolutely.
Yep.
Generally speaking, they are. And what are the accountants doing? Well, first things first, you know, the accountant should request that they put forward a cash flow of some description and pressure test that. And if they can foresee issues, then, mate, they need to reach out to us. Need to. Like, you know, someone about a potential restructure.
Yep.
Because we can save it. Not only can we save the company and the employees, but we can also save the creditors incurring further debt and losing more money.
Yep.
They won't be able to get 80 cents, 100 cents on the dollar. They just need a bit of a moratorium, so to speak, and a capping on that interest, and the creditor will get 100 cents on the dollar, as opposed to sitting back doing nothing, putting your head in the sand, and trying to bargain with people over 10 cents.
We can see this going off the rail here. We want to make sure that before it derails, we salvage whatever we can salvage, as opposed to, I'm coming to a train wreck.
Well, you know what, Stephen, as
That's
well.
sad to hear.
And it's very common too that people come to us, and an accountant will come to us and is in trouble. It's like, mate, they don't need us. You know, you know what? They might need a debtor facility to help with their cash flow.
Yeah.
You know, what type of, let's just say it's a labour hire company or something like that. You can't trade. You're paying your staff weekly, and your pay terms are 90 days with your customer. And how have you operated this long without a finance facility?
Yeah,
it's like, mate, just go and see this person.
Yeah.
Bang, done, away.
And I think that's a big thing. Like, reaching out to us doesn't mean doing a liquidation or doing an administration on SBR. Like, we can give you the advice or tell you the options, tell you what we think, and point you in the right direction.
Yeah, mate, safe
Go
harbour.
talk to this person. Yeah, think about a safe harbour and protections that way.
Yep.
I've got money, I want to put it in. I'm just not sure, I don't really want to take that risk.
Yep.
Well, you know, what are my options? Well, you know what, we can give you a safe harbour report, which will provide you with some guidance, give you some coverage, give you some confidence that you can move forward. You know, because it's for that to survive, it's all in, it's not bit part.
Yep.
And if you're not all in, then maybe you should step away or look at liquidate. But you know what, if you've got that conviction, you've got the resources, and you just need something to support you with a foundation, we may be able to help you, you know?
There you go.
So, how's that?
It's good.
Very good.
Is there anything else we really want to... I guess, let's summarise this. Early intervention, yeah?
Absolutely.
Early intervention, first and foremost. You've got a tax debt, you reach out to your broker, you ask what your options are.
Yep.
A broker gets someone with, you know, they've been reported to credit agencies or they've got a tax debt. Do not turn them away straight away. There are options.
Absolutely.
Do some research. Look around. I don't know, speak with your aggregator.
Yes.
Reach out to Stephen.
Yep.
Contact us. There are options. The broker won't be compromising their own commission?
Yep.
Because there's other items that they can do.
Absolutely.
That they can be the hero and the trusted advisor moving forward. And also too, like, and then most importantly, which is what I really wanted to get you on, is that an SBR does not mean that you will not be able to obtain finance in the future.
Absolutely.
If anything, it actually strengthens your position.
If you're looking to enter into an SBR, I would go into it eyes wide open, knowing that if your business should be growing and it's a going concern. Yes, you'll have a 30-day period where your credit file doesn't look great, but everyone should acknowledge that.
Yep.
But it will not compromise you long term.
And out there for all the directors, if you're going to your broker and is strongly discouraging you not to do an SBR, which could save you, could save the company, and get a good return to the creditors and all those type of things, and he's downright adamant it's going to ruin your credit rating and ability to get finance, my suggestion is get a second opinion.
For sure.
Yeah.
Yep, absolutely. Wonderful.
Stephen Michaels.
Catalyst Advisors.
Thank you,
How
gentlemen.
about that, mate? You've thank you for your time, and sorry for being a little late and taking up some of your Friday, but we really appreciate that, and we think it's really important to get that out there. You know, there are options. Don't turn anyone away.
Absolutely.
And be that hero.
Yeah.
Help them out.
Who doesn't want to be the hero, right?
Yeah, right.
Yeah, for the right
Not all
reasons.
heroes wear capes, do
I
they?
know, they have beards and glasses. Apparently, nah. Thank you, gentlemen.
Good
That was
on you,
fun.
mate. Good on you.
Cheers.
Thank you.
Thanks, gents.